What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's the time we've all been waiting for because the weekend is here. But more importantly than that, it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. This week, we've got major product announcements out of Meta, new pricing and an ad tier out of Netflix, and a lot more. I do want to note I am recording this at about 8:30 a.m. Pacific time, so well before we normally do that, so that'll impact the pricing. If there's a late day rally or a late day sell-off, you might think I'm smoking a little bit over here, but no, we are recording this at about 8:30 in the morning. Let's kick things off like we always do with Meta Platforms. Started the week at 133, slid down about 3.5%, ended close to 129. That is after Mark Zuckerberg kicked off his Meta conference earlier this week, and he showed off a high-level $1,500 headsets, which really has me scratching my head because it doesn't appear that the headsets that cost significantly less than this are flying off the shelves and selling very well. Raising the price doesn't really seem like that great of a strategy, but who am I to question old King Mark Zuckerberg? Now, the headset, as you see here, has a more streamlined design. I actually like this design a little bit better. It has a way to kind of keep this headset on, but then peer out to the actual universe. It has this shade over the top to kind of block out even more light. It obviously has more pixels and has a little bit better resolution. They also announced, which I thought was interesting, the CEO of Microsoft discussed an integration with Microsoft Teams and Office and Windows, which is anticipating to roll out sometime next year when they release kind of an Office or kind of a quote professional version of this meant to be used in a professional work environment. So they have this $1,500 model, which is more for gaming. And then they're imagining, and I'm including Facebook and probably Microsoft in this as well, they're imagining people, instead of getting on a Zoom screen with a computer, you're going to strap this on your face and have meetings in person, which I think there's probably some use cases there, but typically on a meeting, you're looking at a slideshow, you might have notes off to the side, you might have your computer and other things that you're using. They're assuming that's all going to get put onto a headset. I'm not believing this at the current time, but it'll certainly be interesting to watch as that product progresses over the years. Now, Meta's top product design executive, Margaret Stewart, departs, and she actually said this was, quote, sad about the departure, and she didn't have any immediate future plans. What we're seeing over at Meta, I think, is, first of all, an exodus of people at the top, and I think that's a little bit scary because you now have Mark at the top, and I don't think there's a lot of people at Meta anymore that can tell Mark, no, Mark, that's a bad idea. Mark, a $1,500 headset is probably a bad idea. Hey, Mark, we should probably focus on our $29 billion ad business. A lot of the top executives are starting to leave Meta, and that's a little bit scary if you're not 100% confident in Mark's vision. If you're 100% confident in Mark's vision, all of these executives and Sheryl Sandberg leaving actually is probably a good thing, because I think Mark has more control over this company than he has since it has gone public. We'll see what happens there. Now, Meta is pushing to throw out its FTC lawsuit over that VR fitness acquisition. They're making some arguments in court. FTC has narrowed their objection to this case. And by all accounts, most accounts that I'm seeing from legal and scholar experts, they say that the FTC has a very, very high bar because their case relies on the fact that this is pure speculation of a hypothetical future state, and they're referring to kind of that VR metaverse state. They're anticipating Meta creating a big, gigantic business there that doesn't exist today. If this passes, if the FTC gets their way in this one, I tell you what, it's going to create a cascading effect when it comes to lawsuits and regulation. My guess is Meta's lawyers are good enough to fight that one. Now, moving on to Apple. Started the week at 139, flattish on the week, ended close to 140. Again, we're recording this at about 8:30 a.m. Pacific time. Apple Card to introduce a high yield savings account with Goldman Sachs. So if you have that Apple Card, it's issued through Goldman Sachs. And so now they're creating kind of a high yield account to where you can insert your Apple Cash or your cash back and then earn interest on that. I think this is an interesting product. I think it competes with probably the Squares, the PayPals, the Affirms, the SoFis out there. There's other banks out there that offer these kind of high yield savings accounts. I think this is just a further integration by Apple to take a shot at the quote unquote banking industry, become kind of a startup fintech with a huge backing and obviously a huge customer base, and obviously with technology to back it up. I like Apple's plans, what they're doing there. Now, Apple is bringing iCloud Photo, Apple Music, and Apple TV to Microsoft platforms. So Microsoft's making the rounds this week. They're partnering with Meta in the metaverse. They're partnering with Apple, or at least allowing Apple to bring on iCloud Photos, Music, and TV to their platform. I believe Apple TV is already available on that Xbox platform. We're seeing some integration there with Apple. Now, Apple is said to be holding back new benefits to its unionized retail store employees. So what Apple is doing is they're rolling out benefits to the non-union employees. So things like maybe different healthcare, different types of education, or paying for tuition and those types of things. And Apple's argument is, hey, unionized employees, we can't roll this out to you because we've got to then collectively bargain and create a contract, and that all takes time. And so some people are viewing this as a way to threaten other stores and other geographic reasons to not form a union. I love this play by Apple. Now, I get comments. It's a minority of the comments here on the channel, but I do get comments when I talk about replacing employees with robots over at Amazon or at Tesla. And then I down talk unionized effort. Folks, I want to make it 100% clear. This is the investor channel, and I would do all of you a disservice if I gave you any other perspective other than the wealthy and greedy investor. That is the opinion and the take I am always going to have on this channel, is I'm going to give you the investor channel take. If you want to have social, if you want to have your woke hat on, or whatever you might want to call it, you can have that hat on. You make that decision. But this is the investor channel, and I love companies that play hardball with these unions. Unions are not beneficial to the company, and I think in some ways not necessarily benefit to the worker as well. Apple showing some reasons why here. Now, Apple's iPad may see some near-term COVID headwinds as demand starts to slow. Hey, B of A, where have you been? These Apple iPads at least last, I would assume, most consumers several years. So the vast majority of people probably upgraded during that 2020, 2021 cycle, not necessarily going to do that in the upcoming new cycle of iPads. But we are seeing, what was interesting is Apple saw strong Macintosh growth in Q3. Other PC vendors started to shrink on weak demand. So Apple likely shipped 10.06 million Macs in the third quarter. That was up 40% year over year. We're seeing other PC makers like Lenovo and Dell and HP and others, they're actually seeing their market share decline. So I think what we're seeing here is that Apple's actually grabbing market share from these others. And this goes back to an argument that I made last year when this M1 chip, now they're on the M2 chip in these Apple computers. And I said it here on the channel at the time, and likely in Apple earnings videos as well, is this chip is a revolutionary chip, particularly in laptops. It gives you better battery life, it gives you better performance, and it's exactly what you want from a battery perspective and a performance perspective on a laptop. And of course, I had all the Intel fanboys and the AMDs and the PC fanboys get in and say, no, that's absolutely not going to be the case. Here's the evidence of that. A year later, Apple is still seeing strong Macintosh, particularly probably in the laptop growth, while other PC vendors are seeing their market share shrink. Now, worldwide PC shipments sink in Q3 on uneven supply and slowing demand. Again, another support that Apple actually has a differentiating product and a better product than what is out there on the market. Now, the PC makers are slowly catching up. They'll probably catch up in a couple years, but where is Apple going to be with their devices in a couple years? That's what you need to ask yourself. Now, moving on to Amazon, start of the week at 114, currently sitting at 110. I grabbed this one yesterday, just a couple of shares. Now, Amazon Prime event estimated to have brought in over $5.7 billion worth of revenue. If you were on Amazon this week, you saw deals. It was essentially kind of a preview of their Black Friday deals, I guess, but you got it essentially a month earlier. I picked up a couple things that I thought were incredibly cheap. We won't see evidence of this on the upcoming earnings. We're obviously on the eve of earnings for Netflix and Tesla. We'll talk about that here in a moment, but we're about 2 weeks away from earnings for the rest of these companies, including Amazon. We won't see evidence of this Prime Day say on the most recent earnings call that we'll get just in a couple of weeks, but we'll see it on the next one. Now, Amazon is scrapping multiple ventures and continuing its cost-cutting mode. Now, I would just view this as kind of shedding fat at these companies, and I think this has long been needed in the Silicon Valley, in the tech companies. They have expanded so much over the past decade that they've gotten into areas that are not necessarily in their core competency or not necessarily going to lead to a lot of revenue or profits in the future. Shedding those employees or diverting those resources and those employees to the core competencies at this company is a great, wonderful thing for shareholders in the long term. Now, Amazon is going to target, obviously they bought iRobot, or they're trying to buy iRobot. Obviously the FTC is trying to halt a $1.5, $2 billion deal like they always try to do. And they're trying to complete this acquisition over at Amazon, but iRobot, still an independent company, won a patent ruling against a key competitor called Shark Ninja. This kind of supports Amazon's purchase of this company because they clearly have some pretty strong patents, and that's certainly something that the corporate lawyers over at Amazon can certainly put to use if and when they acquire iRobot. Now, TikTok is planning some U.S. fulfillment centers, a move into Amazon's consumer space, and this is according to one of the job descriptions that are posted online. By providing warehousing, delivery, and customer service returns, our mission is to help sellers improve their operational capability and efficiency, provide buyers a satisfying shopping experience, and ensure fast and sustainable growth of TikTok Shop. So it looks like TikTok is going into the shopping space, e-commerce space. I would actually say this is probably more a shot across the bow at like a Shopify, because if you are familiar with Amazon's fulfillment center, there is nobody even close to this company. You could open up 1 or 2 fulfillment centers, and Amazon has 1 or 2 fulfillment centers in like 100 or 200 mile radius in a given state. Shopify has tried to go this route as well, and they already have a bevy of sellers on the platform, and they have nowhere near the fulfillment capacity of an Amazon. I would say if TikTok is successful in going into e-commerce and retail, it is far, far more greater risk at a Shopify. Amazon planning a 1 billion euro, which is I think close to about $1 billion investment in European electric van and truck fleets. Obviously, they continue to shift in that direction. And as long as energy prices remain elevated, this is a way to reduce cost in the future and appear to be environmentally conscious as well. Moving on to Netflix, start of the week at 227. This one just continues to hold its level. It's very impressive, up about 2% this week. End of the week closer, or is currently at about $235 per share. Now, we've got earnings next week for Netflix, as most analysts believe that their subscriber ads will grow in Q3, but revenue may slow down a little bit. Third quarter subscribers expected to grow about to 1 million subscribers, give them a shade over 221 million global subscribers over at Netflix. Revenue expected to be about $7.8 billion. That would be up about 5% year over year, but it would be a decline quarter over quarter by about 2%. The 4-year growth rate over at Netflix being about 4%. Now, Netflix is launching an ad-supported plan starting November 3rd at $6.99 a month. I was talking about this with my wife. Okay, so there's an ad-free basic plan at $9.99 per month at Netflix. I tell you what, the delta between $6.99 and $9.99 is not very wide. If you can't afford $3 extra to not sit through commercials, I'm wondering what your life choices are when it comes to making money. Now, you do have a standard plan at $15.49, and there's a premium plan at $19.99. This certainly might impact Netflix's churn a little bit. Maybe people are less likely to like subscribe and binge on a $6.99 plan versus a $9.99 or certainly $19.99. Obviously, the difference between $6.99 and $19.99 is far larger, but I was actually hoping this would be a very nominal fee, if not free. We'll see. Maybe Netflix will have some pricing power here. Maybe they'll be able to, and I'm talking about pricing power in the reverse way, where they get enough advertisers to sign up and aggressive advertisers that pay for a lot of ads. Maybe Netflix could really actually reduce the price for this over time. Or what I think this might do, probably a better argument, that might not be a good argument. I think what this might allow them to do is hold this $6.99 ad tier plan, but start increasing the other plans. Go from $19.99 to like $24.99, go from $9.99 up to like $14.99 and have a standard plan sitting right there about 17, 18 bucks. I think that's the Netflix plan. I really think they should actually widen the gap between an ad-free and an ad tier. We'll see what their strategy ends up being. I'm sure they're just kind of testing these things out, and a year from now we'll have good insight into how well it's worked. Now, Netflix could generate $2.7 billion in ad revenue just from the United States and Canada by 2026. That's according to JP Morgan. I think that's conservative. Remember, we are talking about ad revenue, not necessarily profits. But on a company that's doing, we just told you, in their most recent quarter, they're expected to do about $7.8 billion. Let's give them credit for like $3 billion in revenue by 2026, which is roughly what JP Morgan is presenting. That, look, that's $700-800 million a quarter in revenue. That's actually very significant. That would be like a 7 to 10% jump in your top line revenues. That's what investors are looking at when you have a $95 billion market cap and you're adding maybe 10% to that top line sales number. Well, it can be attractive for investors. I think that's why Netflix stock is holding up very nicely. Now, here's another interesting thing about Netflix is they're looking to close on a deal to take over a 300-acre New York site for a production complex. I actually think this is kind of interesting because we think about Netflix as kind of this asset-light business model. Sure, they own the rights to some shows and some producers and some series out there, but they don't have any of like physical, tangible type of property. Obviously, they probably maybe own or lease or part own some office space and things like that. But actually owning and having ownership in some production complexes, I actually think is interesting. Certainly would take you more towards that Disney route in terms of assets. And that certainly on a $95 billion company, 300 acres in New Jersey, just a short drive, just 50 miles from New York City. That's certainly valuable real estate over the long period of time. Now, moving on to NVIDIA, started the week at 118, slid down about a 3%. Again, I'm recording this. It's now about 8:45 a.m. We ended the week close to about $114 on NVIDIA. Now, that's after Intel, NVIDIA, and Lam Research are seen to have the most risk from those, quote, China restrictions that were passed down, or passing is not the word. These were just regulations that were created out of thin air by the Biden administration this week when it came to selling chip making materials that were formulated or made in China to other parts of the world to make these important chips like AI and advanced computing, obviously in NVIDIA's wheelhouse. Now, we talked about yesterday on our earnings call with TSM, Taiwan Semiconductor, which makes the vast majority of chips that NVIDIA makes. TSM actually has a 1-year kind of grace period to kind of deal with these restrictions. Here's what I think's going on, and hang with me for a second because we're going to dive into kind of the meat and potatoes, or the sausage, if you will, of United States politics. Now, you recall a couple of months ago, Nancy Pelosi, the Speaker of the House, went to Taiwan. She met with people from TSM. She met with a lot of people from the chip industry. This was several months ago. Now, after that, several of her colleagues also made the trip to that. That didn't get a lot of news coverage, but a lot of her other colleagues went over there. This is what happens in Washington. A big leader like Nancy Pelosi goes over there and she finds a pot of gold. And by pot of gold, I mean lots and lots of money. Okay, there's a reason why Nancy Pelosi is a multi-hundred millionaire. Also, many other members of Congress, 100 millionaires. Okay, and I'm not picking just on Democrats. This also is obviously applicable to Republicans as well. They are multi-millionaires because they go over to these countries, they get greased up, they get some money, and then they come back here, they send their friends over there, and then this is what happens. This is all telegraphed. This was all telegraphed in the back room. Biden has been in Washington for basically his entire life. He knows exactly how these things work. He had quote-unquote regulations that were already drawn up months ago, and then after his friends went there and got greased up by the Taiwan semiconductor manufacturer, well, all of a sudden he now passes he didn't pass a law. Okay, he created some regulation out of thin air, and then he said, oh wait, you've got a year to kind of comply to this. Well, over the next year, what do you think is going to happen? What do you think Taiwan Semi is going to do? What do you think where the money is going to flow out of Taiwan Semi to get those regulations kind of tamped down, or give them another extension, or constantly give them another extension? This is how how these things work. I don't think these regulations are ever going to go into place. I don't think a law is ever going to be passed on these types of things. I think these companies are going to be fine. It's more of a demand story when it comes to NVIDIA, when it comes to Intel, when it comes to all these chip makers. It's really a demand story, and certainly from an inventory and a supply perspective, there's too much supply. There's not enough demand from a crypto perspective, from a gaming perspective. That is what's going on. I think these geopolitical and this other stuff is just smoke and mirrors to line the pockets of politicians. Moving on to Google, start of the week at 97, ended the week, or it's right about 97. This one's kind of flatlined over the last couple of days. Now, EU regulators are preparing to charge Google over its ad tech business. There appears to be kind of slow talks or a breakdown in kind of a settlement talk. If I'm Google, I'm not settling here, but this could be another like multi-billion-dollar fine for Google. This is another way these politicians line their pockets. Now, Intel, Google launch a new chip aimed at making cloud more secure and efficient. Google they're already in kind of the chip design business. They're obviously partnering with other people like an Intel. Google's obviously going to use these in their servers in those Google clouds and obviously operate customers' properties on the Google Cloud, but also will operate things probably like Google Search and YouTube and other properties that Google operates. Now, Google teams up with Coinbase to accept crypto for its cloud services. This is coming sometime in early 2023. Some people that have cloud services and obviously rack up a bill every month for Google will be able to pay that in crypto. Just simply another use case for crypto being used as a measure of exchange. Moving on to Microsoft, start of the week at 231. Basically, like Google, a lot of air has been let out of the balloon. You look over the last 6 months on Microsoft, down 16%. Over the last month, down about 9%. A lot of air left out of this balloon, and so you're ended the week about flat at about 230. This is after Microsoft take aimed at Sony in a response to that UK Activision probe. So UK, I think it was last week or the week before, they probed some of the competitors or some of the other video game makers in this space, and Sony was crying a river saying that there was this huge importance on Call of Duty to their business and the PlayStation, and Microsoft saying is they're significantly exaggerating the importance of Call of Duty. I'm not exactly sure if it's Microsoft's goal to take control of Activision and then only make those games available on Microsoft. It seems a little counterintuitive considering what we know about these devices is the fact they're not huge profit centers. The actual PlayStation, the actual Xbox, these aren't huge profit centers. It's actually the digital goods that get bought on these games. That's the huge profit center. So I don't know why Microsoft would want to release a game and not put it on Sony's platform so they can sell these weapon packs and whatever else is inside the game. I will see what ends up happening with Microsoft. They obviously have more intelligence on this situation than I do. But again, our opinion remains the same with this deal. It's going to close after the elections here, particularly in the United States. Moving on to Tesla, start of the week at 219. This is another stock I picked up this week. End of the week down to closer to about $210 per share. This is after Tesla sold a record 83,000 China-made vehicles in September. This is not for the full year. This is just in September, and this is after they put up a big August month as well. In fact, 83,000 cars is over 5% more month over month. Excuse me, that is an 8% increase month over month. The month over month growth just in wholesale electric vehicles in China was 5%. So Tesla outpacing the electric vehicle growth in China, and then obviously increasing at near a double-digit rate just month over month. Now, these China-made cars, obviously they're getting shipped out and distributed inside China, but a lot of these cars also get exported as well. So I know a lot of you fairly assume that the China economy is weak and maybe these numbers are not sustaining. I'll have a news story here in a second that kind of indicates that, but some of these cars are pushed out to, in fact, a lot of these cars are pushed out to other markets. I think what this also shows you is Tesla's ability to scale up these production facilities. Now, here in the United States, it's likely going to be a slower grind because you have regulatory environment. Certainly out here in California, there's a space capacity. Out in Texas, probably a little bit less so. This is impressive. If Tesla is able to maintain this type of demand, they should have the capacity to meet it. But Morgan Stanley came out with a note today that says Tesla is very likely experiencing demand destruction. And I don't necessarily think this is that surprising. If you try to go out and get a car loan, I'm not in the market for one right now, but I can imagine if you try to go out and get a car loan and you don't have the most pristine credit, even if you have pristine credit, it's probably pretty high, certainly compared to a year ago or even just a couple of months ago. But if you have suboptimal credit, you're probably looking at like a 7, 8, 9, 10% interest rate if you were trying to buy a car, and these cars are already quote unquote expensive, and paying a 7, 8% interest rate on that certainly will slow demand. Here's the opportunity though for Tesla. They could create their own financing arm. They could also push more people to lease these vehicles. When I was in the market to buy my Tesla, certainly the lease payment was very attractive, but they didn't have a buyout term at the end of the lease. So you're essentially just renting the car from Tesla. I chose to buy my Teslas because they hold their value for a much longer time. More often than not, I would actually recommend somebody lease a car, especially a very expensive car. Tesla can make some innovation when it comes to financing, when it comes to leasing these cars. And I think that's the opportunity for Tesla if these interest rates stay high. And that is the reason why they might experience some demand destruction. We're not seeing it quite yet with Tesla, but certainly if we start to look a year or two out, certainly could become a problem. And that's where the company could innovate from that financing perspective. Moving on to the technical segment of the show, we'll kick things off with the S&P 500. This level that we had marked out here in a black line, we'll call that about 3,600 on the S&P 500. It is currently being tested right now. I'm recording this right about 9 a.m. Pacific time. So the prices and what you're seeing in the price action, it's several hours before you probably end up watching this video. But this line is kind of a line in the sand for investors, at least on the S&P 500. We did wick through it yesterday, or maybe it was the day before. There was this gigantic reversal candle, which you don't very see a lot in the stock market. Oftentimes that can be a reversing part for the market, at least in the shorter term. It's a dramatic reversal. I was a buyer yesterday of a lot of stocks because that was a pretty dramatic move. Obviously, a lot of people are working out there. You're not paying as close to attention as the market as maybe I or other people out there. So you might have missed this opportunity. I wouldn't really worry about it. You might get another shot in the coming days, but we are holding that 3,600 level on the S&P 500. If we significantly break through this and kind of close underneath 3,600, I think you got a really high probability to come into 34, and it opens up the chance of getting down to about 3,200 on the S&P 500. Meta. Now, Meta, I did buy yesterday. I bought it on this down candle. And some of you are saying, well, in hindsight, you're constantly buying these stocks. That was the plan for weeks, okay? So we were trading this chop up here on Meta. I got destroyed on this red candle. I was like, okay, I'm just going to let this fall. It probably will come to the bottom of the channel. Finally, it did come to the bottom of the channel. Bought a small position. This is in a shorter term kind of trading account. Although fundamentally, I like Meta at this area. You got a $340 billion market cap. You got a $29 billion quarterly run rate on their ad business. Mark, I think, is going to wake up one day and say, well, maybe I should go play with my VR headsets and maybe put a professional in charge of this company. Who knows when and if he decides to do that. But we are at the bottom of this channel at Meta, and I do like this area from a technical setup. If you get back towards the top of this range, even if it happens over a long period of time, that is a 20% move. I love 20% move, 20% upside. Sure, this thing could dump out the bottom, but you do have an area of support basically where the stock is sitting right now. It did bottom out at this area back in December of 2018, right in this kind of 120 range for Meta. This is an area where if you like, look, I had tons of people on my channel when I turned negative on this stock after this earnings drop. I turned negative right at 200, 220. Everybody was like, no, you're crazy. This is the biggest value in the history of the stock market. Well, we're down another $100 on it. I tell you what, guys, if you like this stock from a fundamental and a value perspective up here, you better love it down here and maybe get married to it at those levels. Moving on to Apple, this level at about 136, very similar to the S&P 500, is holding with Apple. I'm waiting to see if you can get this one lower. Now, I am saying that because I've already overweight Apple. It's my one, it flip-flops between Amazon and Apple being my largest holding. So I'm being a little bit more patient on this one. I'm thinking it could break through this 130 area, get it closer to 120, 125 would be exciting. The rock bottom area we have down here at about 115. If that doesn't materialize, the stock makes a reversal, markets make a reversal, no big deal. I already have plenty of exposure to Apple. Moving on to Amazon. This is one I got yesterday on this candle, not all the way down. Man, it got all the way down to like 105 yesterday. I bought it, I think, at like 108, 109, basically where the stock is right now. I'm just going to let it marinate for another day or two, or really into next week. You've got earnings with Amazon coming up on October 27th. We've got a date with Amazon in terms of their earnings. We'll see what happens there. Moving on to Netflix, not a whole lot new to report with Netflix from a technical perspective. If you look at the micro trend though, you're making a series of lower lows and lower highs. So there's a little bit of momentum taken out of this one. Now you do have earnings on this one next week, just 4 days from now on October 18th. So I don't blame any investor out there kind of taking a pause on this one and waiting to see how those numbers produce. I tell you what, on Netflix, depending on how those numbers go, depending on how the market digests them, you could have a dump to the bottom. Anything south of 200, I think is probably a buying opportunity. Anything up over 250, that also is probably a momentum buying opportunity. Not necessarily on the day. Let's create a scenario here. Okay. We say Netflix puts out this great report, market's bullish, and it pops. It goes from like 230 up to 260. I wouldn't chase it there at 260. Typically what happens is you have some kind of subsequent pullback to back test the major trend. In this case, it's a major resistance line. Typically you come back and back test that line. Now I wouldn't wait for it to get all the way back, but I think if you pop to say like a 260 level, you come back to 250. That's where I'd step in on Netflix, because again, you have this huge gigantic gap here. You get over this level and you back test here, show that it's now, instead of resistance, 250 instead of resistance, turns into support. That should rocket you higher. Moving on to NVIDIA. This one's just in this downward trend. And in fact, we actually broke below. There was kind of a tippy area of support that we made back here in March of 2021 at 116. We've pierced through that again. I probably should have had the same outlook I had in NVIDIA on basically all of these stocks, that they were just going to continue to go down. It was very clear with NVIDIA. Now we are testing the bottom of this channel. If you like shorter term stuff, you got a bottom channel kind of bounce to the top, probably not a very high risk, but also not a very high reward trade. This one I think is coming into the double digits. You're at 113 right now. I think from a valuation perspective, you are in kind of that $70 to $80 on this one. That certainly will be an area where I very much go bullish on this stock's future. We don't got earnings until November 17th on that one. Now, Google holding that $100 level, or right around that $100 level. If it got to the bottom of the channel in any short order, you're down here at about $89, $90. That would be an area where I'd be very aggressive. Obviously with Meta, I like the bottom of the channel. With Google, I like it even more. You got earnings on October 25th with Google. Now, moving on to Microsoft, this area at 231 was an area of support. We pierced through it just briefly earlier in the week, and it's kind of proving to be a little bit of a magnet. I still think this one's in a pretty tight downward channel. We've got earnings with Microsoft on October 25th as well. Again, about 2 weeks away. A bad earnings report should push you to the bottom of this channel, get you close to about that $200 mark on Microsoft. In my opinion, that's a big moving opportunity. Now, a break up is not really unexpected. You put up some big green candles on this companies, but understand that you've got to put like a really big candle up on this one to really show that the technical trend has been reversed. That's why if you're bearish these markets, or you certainly have a shorter term focus with your investments or your money in this market, that is your area to get out. On these rallies, you should be selling. If you're bearish, if you think the economy is just going to continue to deteriorate, and on top of that, just because the economy deteriorates doesn't mean the entire stock market is going to deteriorate. So you've got to be able to separate those two things. We'll certainly get evidence of that when we look at these earnings, and the earnings that we're getting over the last couple of days from TSM and JP Morgan today haven't looked bad at all, and the commentary from the executives hasn't been bad at all. But you should be selling these rallies if that is what you want to do. Now, finally, Tesla held this line. I mean, we've had this line marked out for basically almost 2 years here on the channel. It's been making a series of higher lows. It has not been confirming it with higher highs. We thought when this stock was up here at about 300, it would probably lose momentum, come back down here and test kind of the 210-ish range. That's exactly where we're at. Now, you can be aggressive in this area. If you love risk and you love taking risk, you can be aggressive in this area, because over the last 2 years, this is an area where you've had monster rallies off of this this range. I mean, that is 100% rally, okay? From June of 2021, you were down here at about 200. And then in November of 2021, I mean, we're looking at a short period of time, just like 5 months, you rallied 100% off this level. You had a similar level down here where you were at about $210. And then you rallied again. This is a more recent rally. You rallied 50%. Okay. You bottomed in May of 2022 earlier this year. And then you rallied 50% up here in August of 2022 to $316. This is why I'm aggressive with Tesla. Look, now the other thing can be true, okay? We've rallied 100%. We've rallied 50%. Certainly, we could do the opposite and we could dump out the bottom of this. And if it dumps out of the bottom of this trend line, it's going to be absolutely ugly for Tesla. But I think that's a wonderful buying opportunity. So if you love risk and you like those high risk kind of popcorn trades, here it is with Tesla. If you get a turnaround in this economy, this is a stock that would do incredibly well. And we have earnings next week on Tesla on October 19th. I'll absolutely do a preview video for Tesla as we have the delivery numbers. We have the production numbers. We can make estimates, very close estimates on the revenue and the profit this company could announce just 5 days from now. Folks, that was the FAANG Stock Recap Show for Friday. Hopefully you guys enjoyed the rest of your day and your weekend. We'll see you again next week with big earnings from Netflix and Tesla and other stocks as well. Good luck with your investments.